Hello guys, welcome back to my channel. Don't forget to like, comment, share, and subscribe. Wall Street ended Friday with all three benchmark more than 3 lower, as Federal Reserve Chief Jerome Powell signaled that the central bank will keep hiking rates to tame inflation. Next hopes for a more modest path among some investors. The Nasdaq led declines among the three U.S. benchmarks, registering its worst daily performance since June 16, weighted by high-growth technology stock, which tumbled after rallying the previous day in anticipation of Powell's scheduled speech to the Jackson Hole Central Banking Conference in Wyoming. The U.S. economy will need tight monetary policy for some time before inflation is under control, Powell said at the event. That means slower growth, a weaker job market, and some pain for households and somebody for households For households and business, he added. Investors knew further rate rises were coming, and they have been divided between whether a 75 basis point and a 50 basis point hike by the Fed was coming next month. However, recent data highlighting continued strength in the labor market, the offset to consecutive quarters of negative economic growth, had led to some speculation as some temperate pace of hikes could be forthcoming. The pushback is coming from the idea that it's not about the pace of hikes going forward and how they tighten financial conditions. It's about the duration of remaining at that restrictive policy stance, said Gorette Melson, portfolio strategist at Natixis Investment Managers. That's the nuance they are trying to push forward, and Powell was maybe a bit more explicit in that today. But if you have listened to other Fed speakers in the last couple of weeks, it's the same message. The Fed's game plan raise and hold, with investors repositioning after absorbing the speech. The Cobb Volatility Index jumped 3 points to 25, its highest close in 6 weeks. Of the 11 major S&P 500 sectors were lower, led by declines of between 3% and 4% in the information technology, communication, service, and consumer discretionary indexes. The S&P 500 lost 1% points or 3% to end at 4 points, while the Nasdaq Composite lost points or 3% to 12. High growth and technology stock dropped. Nvidia Corp and Amazon.com inch fell 9% and 4% respectively, having led gainers in the previous session. Meanwhile, Google parent Alphabet Inc., Meta Platforms Inc., and Blog Inc. also dipped between 4% in and 2%. U.S. stock indexes have retreated since the turn of the year as investors price in the expectation of aggressive interest rate hikes and slowing economy. But they have recovered strongly since June, with the S&P recouping nearly half its losses for the year on stronger than expected quarterly earnings and hopes decades high inflation has peaked. However, Friday's fall wiped out the modest Augustus gains which all three benchmarks had previously carved out and sent the trio to their second strange week of declines. For the week, the Nasdaq slid 4%, the Dow lost 4%, and the S&P 5000 fell 4%. Data earlier showed consumer spending barely rose in July, but inflation is at considerably, which could give the Fed room to trim its aggressive interest rate increases. Dell Technologies Inc. fell 13% as it joined rivals in predicting a slowdown as inflation and the darkening economic outlook from consumers and business to tighten their purpose strings. Okay guys, maybe that's all from me. Thanks for watching and don't forget to like, comment, share and subscribe. Thank you.